I feel like a bit of an imposter talking about financial inclusion after such an illustrious panel. But I come from a digital company, and I wanted to provide the perspective that we have around financial inclusion. And the topic of the presentation is driving sustainability, and I think that was discussed with the panel. And I'll provide a little bit of perspective about how we think about it. So first of all, just for the record, I think India has done an amazing job in driving financial inclusion. I think there is no debate about this topic. While there are a number of challenges, and the challenges will continue to increase, when I look at the way the world looks at the problem of financial inclusion in India, what India has done, what NPCI has done, what the government has done, and the fintechs and the institutions, it is remarkable. So the challenge for us is to drive the next level of inclusion, which is all about sustainability. And sustainability, I think, as everyone knows, it's a journey. And it starts with having great products. India has made quite a substantial impact in payments, but there's a lot more to be done. I think the panel again discussed it. We have to increase the products available to the population. We have to go into credit. We have to go into insurance products. We have to go into savings products. And these products have to be aligned to what the customers actually want across India, whether it's Mumbai or Tembli or the wider India. Financial inclusion, the move to sustainability, fundamentally starts with having a suite of products beyond payments. I think the next step, which again we've spoken about, is driving adoption. I think we have achieved simple adoption. I think there is absolutely no debate about this topic. But we have to go beyond simple adoption to actual usage of these products. What you don't want is people getting money into their bank accounts digitally and then simply withdrawing it, right? That's not going to drive usage. Once you actually have broad usage, one of the big topics is this sustainable? Financial inclusion in India involves multiple stakeholders, from banks to fintechs to government bodies to regulators to people who provide infrastructure. Is this profitable to them? Is this something that they can sustain on an ongoing basis? Because if it's not, then this goal of reaching sustainability will always remain a little bit of an unachievable target for us. So that's really where we are headed. We are headed to the apex of this pyramid. How do we make financial inclusion sustainable? And for this, I look at a few different parameters, right? I think financial inclusion has obviously a demand side, which is all the citizens of Bharat. It also has a supply side, which is all of you in the room, and a lot of fintechs, other institutions, the broad financial institution framework of India. And of course, you have the regulatory and the infrastructure stakeholders who have contributed immensely to get us to this place. But where I really wanted to focus this conversation is, what do the end users want, right? We call this the demand side, but these are all of the people, the constituents who we are building this for. What do they want? And how do their needs differ from Mumbai to Tembli? And I think the panel was discussing, how do we make Tembli like Mumbai? That's a good question. But one of my questions is, what do the people in Tembli want? It's probably not the same thing that people in Mumbai want. So we have to figure that out. And by the way, Mumbai itself, if you go from one end of the other end of Mumbai, the people of Mumbai itself want different things. So how do we understand that? I think one of the speakers spoke about this, that what we know about customers is perhaps not exactly correct, right? I think more work needs to be done on this. The second part of it is the supply side, all of the financial institutions, some of who are in the room. How do we build the products that meet the needs of these customers? How should these products be distributed so that it's sustainable? How do we manage risk? And how do we do all of this cost effectively, right? So there are a lot of questions, but these 3 or 4 questions are very, very critical for us to understand how to achieve sustainable inclusion. And the way I look at this is that this is a little bit of a pyramid, but it starts with customer experience. And I think it ends with customer experience, because what people want, whether it's in Tembli or Mumbai, is critical to what all of us are doing. And we've perhaps reached a place where the customer experience of the citizen is functional. But where I think we need to take this is what some people call a joyful experience, something that makes people happy. But I think there is an end target beyond that, which is about meaningful engagements, meaningful customer experience. I think when you bring an end user on that journey from functional to meaningful, that goes a long way in making financial inclusion sustainable. Now, customer experience is obviously a very big word, but when you're talking about 1.2 billion people in India, customer experience is more likely to be digital or application experience than a face-to-face experience, right? And this is where I think we are headed. With digital technology, financial inclusion, of course, is a component of digital inclusion. And therefore, customer experience, to achieve that meaningful customer experience, is probably going to require quite a lot of digital technology and quite a lot of application experience. And therefore, the question in my mind is, as we deliver that customer experience, do we have the digital and IT operations capability to deliver on that experience? And we all know, I think, within the digital world, the apps on your phone, right? They look very simple or they could look very complicated. But delivering that application experience is very, very hard, right? If you think of it as an iceberg, the application on a mobile phone of an individual in Tembli or Mumbai is simply the end product. Behind that product, to deliver the innovation, to deliver the capabilities, to deliver that user experience is a very, very complex set of technologies, right? So that's hard for us to do. Whenever we think about application experiences and delivering application experiences, we tend to talk a lot about disruptive technologies. We speak about AI, we speak about building data lakes, we speak about multi-clouds or public clouds, we speak about containers, we speak about microservices. Obviously, there's a lot of conversation these days about security. I think disruptive technologies is a part of the answer, but I don't think it is the complete answer. The part that is missing for me is the innovation model of financial institutions and all the stakeholders involved in getting this inclusion agenda moved forward. And you can have the most disruptive technologies in the world, and technologies will continue to come out, right? And they will continue to disrupt the paradigm. But we will not achieve the benefit of these technologies if we do not change the way our innovation paradigms work. And this is the thing that distinguishes digital native companies or cloud native companies or people like Lemonade, who were spoken about earlier, who, by the way, have just achieved a $2 billion valuation, and the financial institutions. And this is a problem, because if you are not adopting the forward-looking innovation paradigms, whether we use blockchain or AI or all of the data, this is not really going to move the agenda of financial inclusion forward. Innovation requires today a significant amount of software, and speed of innovation requires the speed of software release to be increased dramatically. So the question is, how do you do that? Can you do that? And this is where I think some of the challenges lie, because when I look upon this across Asia Pacific, also India, the current innovation paradigm of financial institutions and their digital native peers, and in some cases competitors, is not the same. In fact, it is probably diverging. And no guesses, the line at the bottom is effectively digital natives. Digital natives start with lower complexity of IT environments. They automate everything. They keep their infrastructure modern. And therefore, as they innovate in software and as they innovate in digital, the technology complexity of digital natives doesn't go up too much, right? It rises, but it doesn't rise that much. So this is the reason why a Facebook or a WhatsApp or a Paytm or a MobiKwik or an Alibaba or an Alipay can innovate so quickly. They're consuming disruptive technologies without necessarily increasing their technology complexity internally. A lot of financial institutions, not all, but a lot of financial institutional players have significant legacy IT complexity today. And as they start consuming artificial intelligence, blockchain, it actually creates an exponential rise in complexity in IT. And this is the reason I mentioned that adopting technologies is not going to solve this problem. Bringing the complexity down and adopting these technologies is the problem that we have to solve. And this is the reason why I think that the digital natives are moving a lot faster. And of course, we have to learn what they're doing well and try to adapt it for our use as well. I want to just provide a little bit of data context over here. We've spoken a lot about fintechs who are all digital natives. There was an interesting survey done by Forrester, I think last year. And the question they asked the constituents, this was done across Asia Pacific and most countries in ASEAN. The question they asked all the consumers is, please select the company who you think has your best financial interest at heart. And you can see that if you go to Australia, the answer more or less is still my primary bank. So Australians love their banking system. But 21% still selected the global technology giants, right? So I won't name anybody over here, but you know who these technology giants are. If you go to China, this picture looks very, very different. People still trust the primary banks. They still trust the banking system in China, but they trust the social messaging digital native company, which is WeChat, and the local technology giants like Alibaba almost as much as they trust their banks. If you come to Singapore, Singaporeans, again, trust the local banks a lot, but they trust the global internet giants. That's sort of number two. And this metric is only going one way, right? And we've seen a lot of the news in India over the last few days that also contributes to this. So guess what the data for India actually looks like, right? No surprises here. In fact, what's interesting is that the people surveyed said that they trust the local and the global internet tech giants almost as much as they trust the local banks. Now, a lot of the financial institutions would look at this and say, well, this is interesting. It's a data point, it's a survey. But regulatory lines pretty much make me, I don't really have to compete with digital natives, right? I have regulatory barriers in place over here. And therefore, this data does not really impact me, right? So which is true, of course that's true. But what this data is indicating is that digital natives are not only innovating very quickly, but they actually are building up a lot of trust in the minds of consumers. And if you look at regulations in neighboring markets, the forward-looking regulators are beginning to recognize this, and they are beginning to release digital licenses that offer full service capability to digital natives. Singapore has just done so. It's awarded 1 digital license, or it's about to. Hong Kong is about to give 2, and Australia is looking at this as well, right? So this may not be in the Indian market just yet, but look, I think it's coming. So what happens? What happens if we don't respond to this, right? We talked a lot about financial inclusion, but to achieve financial inclusion and driving that innovation that is required to achieve inclusion, business paradigms can evolve as well. And there was an article, in fact, in Economic Times yesterday about how Facebook is being used as a distribution agent, as a partner for banks to distribute financial products. So partial disaggregation of financial institution structures is a distinct possibility in the future, where a fintech, it could be a Facebook or it could be a domestically grown fintech, could become the distributor of these products because they have an ability to connect to the 300 million users of financial inclusion and bring them a meaningful experience better than institutions. And the role of institutions then becomes creator of products. Another possibility is full disaggregation, right? This hasn't really happened yet, but this is a possibility where a new player, especially where the regulatory environment permits it, creates an alternate landscape of products and competes with incumbent players just purely based on digital capability. And we are seeing that digital capability grow by leaps and bounds in this country. It hasn't quite reached this space, but again, this is a possibility for some markets in Asia Pacific. The third thing, the third option, which is what I really hope happens in India, is that the financial institutions themselves become this provider. And what this will require is innovation within their own products to align to the capabilities that are required by the people from Mumbai to Temli. But it also means that you have to create an ecosystem environment where you are becoming the broker of services to a lot of the new capabilities that the citizens need as well. And this will require quite a significant retooling of how digital and IT transformation happens within these institutions. And whether we are ready for that or not, I don't know, but this is definitely something that I think we should all look at. It's not an easy problem to solve, right? If you're an incumbent, you are pretty much you're dealing with a lot of legacy systems. You have business layers, you obviously have to run a business. You have applications to manage, you have infrastructure to manage, you have networks to manage, and most importantly, you have to manage security and risk. Your problem is that you have a lot of legacy systems that are doing a lot of different activities, and you have a lot of different teams within your institution that are siloed. Some teams looking at applications, some teams looking at infrastructure, some teams looking at networks, some teams looking at security, right? And this is a very typical structure of how IT operations is structured today in large banks and in some institutions. Digital natives, not so much. They are not structured like this. And therefore, the way they can evolve and innovate around customer experience and provide the unique experience that somebody needs in Tembly faster than some of the incumbents, that's what makes it possible. So what can you do about it, right? What we are advocating is, first of all, simplify and automate. If there is one thing that separates digital natives from institutions, if there's one thing that separates us from what financial inclusion customers want from what we can offer them today, it is automation. And effectively, it's automation across the complete value chain. And to achieve this automation, first of all, you have to create visibility of your complete network and the offerings that you have. You have to use a lot of technology to gain insights out of it, and then you have to take action. We talk a lot about advanced AI, advanced machine learning, but that's probably not really going to help you unless you're able to take meaningful insights and take meaningful actions, right? So the first thing on that journey is simplify and automate across these three layers. And the second thing is really introduce capability within your IT systems that can take preemptive action. So you have to go beyond what we call DevOps today, which is what a lot of institutions are deploying internally to deal with applications. But you have to leverage the power of artificial intelligence so that you're consuming all of these transactions, all of this data that is coming from your users, it's coming from your network, it's coming from your security applications, and it's coming from the applications that you're providing to your agents and your partners. You have to consume all of this data, make sense of it through advanced AI, through correlation engines, and then you have to take automated action. And therefore, where you have to deploy your people is in building meaningful products for the people of Tembly, for the people of Mumbai, and all of the citizens that need financial inclusion. What you want is your IT network to be as automated and functioning using AI ops, very similar to the way digital natives do this today. And I feel like this is a very tangible step that all of us can take that will improve our innovation paradigm and therefore allow us to go after that very elusive customer experience that we need to make financial inclusion not just a simple product, but a sustainable way of building out the ecosystem going forward. That's all I have, and I really thank you for the time, and I hope this was meaningful and useful.